Welcome to the Investment Process Channel. I am C3 Christopher Campbell. This is a channel where we teach people how to create generational wealth through trading. Okay, we're going to talk today about setting up a trailing stop and a bracket order in Tradovate slash Tradingview if you have the two accounts merged. I know I kind of struggled with it, so let's get into it and help you out. Okay, here we are. This is my Tradovate account. I'm here on a 1 hour time frame. So I was trying to set up a trailing stop. I scalp, so I am king of trailing stops. I like my stop order to trail behind. Let's talk about that. This is where you set a stop after you've entered the market, and what your stop does is it trails behind price as price moves up or down, depending on if you're long or short, right? So you want your stop to move up to break even after you hit your target, right? So let's say you're going for a 3-to-1 and you hit a 1-to-1 or maybe 0.5-to-1, whatever it is, then you move your stop loss up to break even. And then after that, it'll trail price as price goes up so you don't lose your gains. The last thing we want to do is leave money on the table, right? So this way, once you set your stop and as price goes in the direction that you have your order, then you start locking in your gains with the trailing stop. So that's what we're going to go over. So again, this is Tradovate. What you want to do here, there are two cogs. There's this one right here, and this is order flag. You want to set that for day, GTC. It's up to you. I'm going to save it underneath day because the I'm set up so that my orders close by end of day. So my orders close by end of day. So what we have here is the ATM, and this is right below. So you have buy market, sell market. Right below is buy bid, sell ask, right? So buy bid, sell ask is right where the price is, where the spread is. So that way, if you're selling the ask. If you're buying the bid. That's where price is, where they're gonna sell it to you at. And if you're selling, you're where the buyers are asking for price. That's where you buy it. That's where you sell at. So that's where we're gonna go to the ATM. It means at the market. So somebody asked me what that meant. I did not know. It was like ATM. What is it? Automated teller machine? No, it's at the market. So this will execute the best price at that time in the market. So that's why it's important to set these up. Definitely want to have a stop loss set up. However, having a trailing stop is even better. So let's go ahead. This cog right next to the ATM, as you can see, I already have a template set up here. We're going to click on that. ATMs, they're off. We want to turn them on. And then we're going to click add. Add is just a template, right? So we're going to say trailing stop. Spell right. It's trailing stop. Template. All right. Trailing stop template. Lot of words, right? A lot of words. So I specifically work in ticks. Let me remove this. All right. Because it's showing what I already had set up, but I want to kind of show you guys from scratch. So ATMs you want on. ATM name, that's what we just did. We gave it a name. You don't have to. I just like to have all of my information ready to go. So if I'm executing, I'll have like 2 or 3. I'll probably have 2 main templates, maybe a breakout, and then a range, where I know in the range price moves a little bit slower. Breakout, price moves faster, so it'll be probably more aggressive trailing stop. So that's why I have the 2 templates, because I trade two different types of trade. I look for breakouts and then I trade within a range. Okay, So you set up your trailing ATM name, at the market name. I use ticks. I don't use dollars, but you can set delta price. You can set dollar value. I typically use ticks because it takes away the emotional attachment. When you start seeing your money go up and down, you know, sometimes people panic or whatever. I use ticks. I know if I'm risking 6 ticks and I'm doing a 3-to-1, I need 18 ticks. I know that within my range. If I'm risking 20 ticks and I need 60 ticks, it's the same thing. It doesn't matter what instrument you're trading on. So that's the reason why I use ticks. The dollar amount won't matter. You know how much your risk is, so you set that your tick stop loss up for that. Next type. So you see here, there's take profit and plus stop loss. So I use the take profit plus stop loss because it moves. This is the it sets the upper limit and it also sets your stop loss. So that's the reason why I do that. If you do this in stop loss only, it only sets your stop loss once you initiate. Take profit only, it sets your limit for I'm doing bullish. It sets your limit for where you're going to take your profit at, right? So pretty simple, but I want to set my stop loss as well as my take profit. Take profit, again, and I just had this here. But take profit is at 8 ticks. I'm risking 4, so that's a 2-to-1. Stop loss is 6 ticks. So in this case, my stop loss is 6. This is my first take profit. So if this was actual, I put that at 18, right? So that's a 3-to-1. Again, stop loss type. You can have a regular stop limit, trailing stop, what we're here to talk about, trailing stop limit, auto break even, auto trail. So I put auto break even and auto trail, right? So the reason why I do that is because, again, you want to lock in your winnings as soon as possible. So for me, I set the trigger once I'm at 4 ticks, my break even hits. It jumps right up to break even. And if the market goes back against me after 4 ticks, it just went against me. I'm paying commission. No harm. Well, that's harm because I got to pay commission, but I'm at break even at that point. If it continues, then I'll hit my take profit goals, right? So profit trigger 4 plus 1. So the plus 1 is the auto trail, right? So once we hit 4, we hit break even, and every 4, it'll go up plus 1. So 4 ticks, I'll go up a tick. 4 more ticks, I'll go up a tick. That way it's trailing. The trailing stop moves along with price action, so that you're locking in your gains as price is moving in your moving with your order. Stop loss, I have down here 1. Stop loss is at 1. Profit trigger is at 4. Frequency every 4, right? So every 4 ticks, it's going to move. Stop loss, it triggers at 1. So if I go in 1 tick, it initiates my stop loss, right? That's what we want. Profit trigger, once it hits 4 ticks, it initiates my limit. It sets my limit. Like, okay, we're at a whatever, right? So again, right now my stop loss is 6. I want to do a 3-to-1. So minimum, when I enter the market, I look for a 3-to-1. So I'm looking for 18 ticks. So that's on this instrument. So you can go ahead and save that. And then you have your trailing stop template. The market is not open right now, so it won't initiate, so I can't really say it. But typically what you do is, if you're going to do a sell, you click sell, and it'll initiate it. It'll set the limit. It'll set the stop loss. This is a sell. So it set your stop loss. In our case, it was 6 ticks, and then it will also set your take profit 18 ticks away. And once, let's say the market goes against you, you're -1 tick, it'll initiate the stop loss. Initiate meaning it'll set it. It won't close it out, but I did it so -1. But once we hit 4 ticks in the direction of our order, then my limit will be set. And then once we hit, I believe it was, let's take a look. Yeah, once we hit 4, we hit the auto break even. So now what else you can do is, if you click here, so here's my quantity. I got 6. Let's say I want to do a max size of 6, so I can do 3 and 3. And let's say I want my take profit for my first one at a 2-to-1. So I put in 12 here. So I lock in some profits, right? We're at that point, we're at 60% of my goal. So let's say I lock it in there. I typically lock it in at 80%. So, but for this sake, we're just doing the numbers here. And I set everything else the same. So as it initiates, it auto trails, and every 4 it moves up. Only difference is, in this case, my take profit is 18. Stop loss is still the same. And this way, I initiated 6. I initiated a buy of 6, but I have 2 targets. So you can do that if you only are trading 1 contract, then you don't need this. If you're trading 2 or more, you can use this. And I like to lock away some gains. So if I'm charging, if I'm doing 2 contracts, then I'll set 1 up again for about 80%, and then the other one at the whole 100% of my goal, and I'll have a trailing stop right behind it. This way you manage your trade and you lose less. You may not get everything that's on the board, but more often than not, if you are entering your trades properly, there's only upside to this. And we don't want to leave money on the table. Okay. So let's go over here to Tradeview and see what Tradeview has. Okay, here we are. This is MES. This is still S&P. This is the micro mini. So this one, it won't be like a 1 or 2. This would be like 10 or 20. You're able to get in more. So let's go. I'm gonna go to trade, create new order. Now they can set up bracket orders. They do not do trailing stops. Unfortunately, it's not available right now. You have your take profit. It's the same thing. Exactly what we were saying. We want our stop loss to be, what do we say, 6 ticks. So that would be 60. Because well, I'll just use 6 since we're doing it. That's really tight. Yeah, let me do 60. And we said 180. Oh, I apologize. No, it's 60 units. My brain is all over the place. 60 units. There you go. This would still be the same thing. My take probably be 18. My stop loss would be 6. Oops, not 66, 6. Time in force again for the day. Let's say the take profit percentage, right? And we're gonna zoom it out. Let's go. I enter in on like the 5 minutes. So you see how let's do a sell. Let's go to the sell. There we go. Let's say prices here, 60.29. $60.29. There we go. All right. So now it kind of makes sense. Now you'll see my stop loss is above. Let's go ahead and move it up here. Stop loss is above here. It's 12 ticks now, right? And we have candle with no wick down here. Let's just go ahead and move this down here. So there, boom, almost a 5-to-1. And you got stop loss right here. It's a nice bracket order. Go ahead, send it. It's a limit order. So once price hits that, then it'll initiate. Your stop loss is already set. Your take profit's already set. And you just sit and wait. Now, the only difference is with this, again, this is a trailing stop video. You have to manually move your stop. So as price moves in your direction, you'll have to pull it down to break even. After that, then you have to pull it down to support, or in this case, it'd be resistance, since we're going bearish. We have to pull it down to where resistance is. Then you keep following that along the way until you hit your target, right? And you know, who's to say? And then you just move up. You come up here, and what do we say? Take some profits. So again, I say about 80%. So that's about 48. And then as it's going, you know, you buy 48 when you hit your initial target, right? So let's say it comes to here and there's support here. Go ahead and take that 80%, let it pull back, and then let the last 20% run by itself. Always take your gain. And if you're doing a trailing stop, you'll have gains locked in regardless. That's just how I trade. Do I let my trade fully run out? Absolutely. However, I do take gains along the way. I do take my gains along the way. So I hope this was helpful. Again, this is Tradovate and Tradingview trailing stop losses. If you're on those two platforms for trading, again, Tradovate has trailing stops, and you can set it up so it trails as you set it up. Tradingview does not. They have bracket orders, and you have to manually move your trailing stop. I think Tradovate, the way it has it set up, it would pay for you guys to really learn how to use the trailing stop. And okay, one more thing while we're here. So how do you set up? How do you figure out how far your trailing stop should be, or how far your stop should be behind? What I do is I use these candles called the Hikinashi candles. What these candles are the average size of the candle. What I mean by average size is how far price moved during that time. So these candles are representative of the average movement of a candle, right? So I use these to set up my stop. So if I'm entering in on a 5-minute, I'll go to my 30-minute. Oh, excuse me, I'll go to my 15-minute. And I'll pick a average size candle. So I'm looking at these candles. I'll just pick an average size candle. Oh, look at this one here. So right here, my candle here, the average, the open is 60.22 right here. The average is 60.22.5, and the high was 60.31. Go ahead and do the math, and I figure out how many ticks that is, and then that's how I figure out where I need to set my stop loss. And then I also figure out, okay, on the 15, then I go here, and let's say my average, this is a nice 5-minute candle here. I'll take a look at this candle and do the math. The same thing I did. I'll do open, high, and figure out that distance. And that's how I'll set my trailing stop. That's how I'll set my trailing stop. The reason why I do that is because this is the average move of a candle on your time frame you're entering. If you are too aggressive and set, set your trailing stop like right behind here, like a couple ticks, 9 times out of 10, and let's do this. 9 times out of 10, we're gonna go off the Hikinashi real quick, right back to the regular candles. 9 times out of 10, you see how close this candle is to like getting stopped out. This is the reason why I said go ahead and use the average. That way, if the market pulls back, you don't have such a tight stop that you'll get stopped out. That's all I'm saying. So I use the Hikinashi candles to figure out the averages of an average candle. I use that as my trailing stop loss number. So yeah, that's a good way to figure that out. So I hope this is helpful. Again, this is trailing stops for Tradovate and Tradingview. So Tradovate, you can set up your trailing stop. You can actually identify the amount that how you wanted to trail it. You can do it to the break even. You can do it so many points behind your initial entry. I think that's very useful. Again, you don't want to leave money on the table, and you definitely don't want the market to whipsaw on you. So if the market's moving in your favor, then you want to take your gains as you go. And having a trailing stop, I think, is a very very good way to make sure you have your gains locked in. A lot of times, and again, I'll work as well as trade. So a lot of times, you know, you might get a phone call or something. Having a trailing stop just is a better way to have your gains secured, especially if you're starting out. For Tradingview, you can have your bracket order. You have to manually move your trailing stop, but it's the same premises, right? Same premises as the market goes in your direction for 4 ticks, 12 ticks, whatever it is. You have it set. You have it written down. Like, hey, once it hits 6 ticks, I'm moving it to break even. Once it moves 12 ticks, you know, I'm gonna go ahead and follow it and move it 4 ticks and start locking in my gains. Start wherever it's either support or resistance where it's showing. I'll move my trailing stop to that point. So I hope this was helpful. Again, this is C3. This is the Investment Process channel. Have a great trading week.